Hey guys, welcome back to Dhruv Exchange YouTube channel. So in today's video I'm going to show you this Nasdaq's trades top to down approach. So without wasting time, let's get started. Welcome back to my YouTube channel. So in today's video I'm going to discuss about this trade of Nasdaq which I took it on this Thursday, okay, because Friday was a losing day for me, Thursday was a winning trade, and these 3 days from Monday it was a winning streak, but on Friday I got a losing streak. So this what my analysis was, okay. If you just do like this, I can see that there is a buy side liquidity on daily time frame and there was a sell side liquidity, okay. And in small scenarios I can see that there was one buy side liquidity right over there and sell side liquidity was taken, okay, right over here. So, and this was the day. So look it over here, how I calculate my bias. So my bias is like, so like look into this day, okay. This day took this day's high, and what's on this day's high? Buy side liquidity, right? And this day's low is right over here, but this day didn't took the low of this day, this one. So it means that price is seeking for what? Buy side liquidity. That's why it didn't went down and took the sell side liquidity, which is below this candle, okay. It went up and took the buy over here, and it has taken the buy side and it has closed outside of this candle's high, right? And now on next day, on this day when I took my trade, I was also looking for bullish scenario. Why? Because like this day took the high of this day, so I'm expecting that this day will also take the high of this day. It will not go and take the low of this day, okay. And I can see that buy side liquidity is near, so it can go and run, it can go through that buy side liquidity. And there was a bank level also, 125,000 round figure, okay. So that's why then I will go on 1h time frame. So you can see, like I explained this was like 15-minute time frame, okay. You can go on 1h time frame and you can do your analysis on 15-minute time frame. So what happened was, like, there was a fair value gap right over here, okay, right over here, somewhere around right over here, okay. There was a fair value gap. So what you have to do is you have to mark your fair value gap. So most of the times whenever there is a trade like this in bullish scenario, when it will go down, there will be some order block or fair value gap like this, okay. So I marked this. This was a one tap fair value gap. Why this was a one tap fair value gap? Because it got tapped at that right moment, right? It made a fair value gap, and at that moment only it got tapped, and then market pushed itself towards the upside, okay. So now what happened? Price came down till what? Halfway, okay. You can see it over here, halfway of this fair value gap. This halfway is called a mean threshold, okay. So it came till over here. And now when it came till over here on 15-minute time frame, and it was like 9 o'clock or after 9 o'clock or 10 o'clock in my kill zone, New York kill zone, okay. So now what I will do is I will go on 1 minute time frame, or I will go into smaller time frames. And I will go into smaller time frames because I want a small stop loss so I can make a big profits and big risk rewards. So that's why, like, if you can get your trade on 5-minute time frame, that's okay. But if you cannot see your setup clearly, okay, that's the thing. You have to choose your time frame when you're going down, which will show you this entry pattern correctly, okay, when it's clear. So I went to the 5-minute. I was not able to see anything on 5-minute, okay. But then I went on 3-minute, 2-minute, but on 1 minute there was an clean entry pattern, okay. So this was the 1 minute. So look it over here. First, market give a market structure shift right over here, all right, and then there was a clear fair value gap, okay, right over here there was a clear fair value gap. So then my entry was on the starting of this fair value gap, and my stop loss was below this candle's low, okay. And then I took my trade right over here, and see how it comes back one more time and taps into that fair value gap, this big fair value gap of 15-minute time frame, and then it pushes towards the upside, okay. And now what will be my target? Now my target will be the daily buy side liquidity right over here, okay. If we go on 15-minute time frame, this will be my target. So I enter right over here, okay, and this will be my target, or this bank level will be my target. So this how you have to do your analysis. On daily time frame, first you have to look for your bias like the way I told you in the beginning of the video, and then you have to go into smaller time frame like 1H or into a bellwether time frame like 15-minute time frame, okay? And then you can come down and you can look in a 5-minute. If you can, or if you are not able to look for a clean setup on 5-minute, then you can go on 4-minute, 3-minute, 2-minute, and if you can see any setup over there, just take it. Like this, I was able to see a clean setup on 1-minute time frame, so I took it over here, and then rest of those the history. So this how it works, okay? And for those who are saying that what will be the bias for next week, so for me, I think so that the next week bias is gonna be bullish, okay? And it's gonna be bullish because if I look it into weekly time frame, right over here, okay, price is pushed towards the upside and taken this week's high, right? So I am looking that this week this will go and take this high on weekly time frame, and on daily time frame it's already bullish. So my target will be this buy side liquidity for this week, and after that I will just wait for another confirmation for my bias, and then this how I will go into smaller time frame and I will be taking trades. So I hope you guys like this video. So if you guys like this video, drop a like, share it with your friends, and subscribe for more content like this. So until next time, wish you good luck and good trading.